Hello, friends. Welcome to Season 2 of the Club podcast. Each week, we bring you long-form conversations with the people building at the edges of crypto and community. At Seed Club, we believe in a world where people, not platforms, capture the value created online, and where community-owned networks are some of the most valuable organizations in the world. Join us for a front row seat to the latest insights and tactical learnings at the intersection of crypto and community. Before we get into it today, another reminder that Seed Club's 5th cohort kicks off this fall and applications open in less than a week. August 1st, applications open. If you're building a token project, a DAO, a community token, something at the intersection of tokens and community, we want to hear from you. Keep an eye on the Seed Club Twitter account. That's Seed Club HQ for more information there. Applications open August 1st. And if you're a club token holder, we will be relying on you to help us choose the next batch of Seed Club projects. Very excited to be rolling out a new platform that will allow you to explore and see all the fun projects that are applying and signal your favorites. August 1st is the date. Very excited for it. All right, so today I'm joined by JoonIanWong. Joon is a former reporter at CoinDesk and now person behind some of the most exciting crypto conferences and events in the space. Joon is one of the earliest members of Seed Club. He's a member of that 11-person Telegram group, which Seed Club burst out from in August 2020. He was an early social token pioneer, experimenting with his own Joon token. We explored some of those early experiments and maybe where they got things right, where they got things wrong, some other experiments that might be worth running. And then our conversation shifted to Web3 media and went deep into the potential and possibilities that lie ahead for projects that are exploring media and tokens, and led to a few insights for myself as well as we continue to think about how media plays a role in the various DAOs that we back, and of course Seed Club as well. Joon is a very deep and thoughtful explorer of the space and active experimenter, and I think you'll find this conversation fascinating. So let's get into it. Joon, welcome to Club.
Hey, thanks for having me.
It's been a while since I've seen your Damien Hirst / jungle background in your eclectic apartment. And I was sharing with you just now, but I was looking back into some of the earliest documents that we created at Seed Club. And there's this document that was sort of like, what is Seed Club? And there you are, jumping in with a million comments. And so sort of made me reflect a little bit on some of the earliest days of Seed Club when there was a small handful of us in this Telegram chat. And of course, you playing a big role there. Maybe before we go too deep down memory lane, how do you describe what you do these days and maybe who you are?
Yeah, I mean, I think I have a slightly quite a long history in crypto, and therefore it's a little bit complicated. So I started, 2013. I was one of the first journalists at CoinDesk, and, we were covering a very, a very niche area of this phenomenon called Bitcoin. I remember my first story was, I live in London, East London. There was a burger guy. His name is Burger Bear, I believe. And Burger Bear was selling burgers and accepting Bitcoin as payment. And that was the story. And so I went to Burger Bear, who happened to be around the corner from my house. I bought some Bitcoin from a colleague, and we went there. I sent Burger Bear the Bitcoin. He gave me the burger, and that was it. And that actually felt so weirdly revolutionary at the time, of just like, holy shit, you can pay somebody in this thing called Bitcoin, and you actually get something back for it. Trite though it was also it was kind of like the first time I had touched the technology. And so, yeah, fast forward to 2022, no longer doing journalism, but I have an agency and we help many of the world's best, I think, crypto projects put on their conferences and events. Just because, community building and conferences are such a big part of this space. And we really bring an editorial lens to it and very high quality production on the ops side. So that's what we do. And the agency is called Amplified. We don't have a website, actually. So it's always like kind of, if you know kind of situation.
Did you ever do the math on how much that burger would be worth today that you bought with Bitcoin?
I never did the math, but I think it would be worth thousands, probably thousands, yes.
Cheaper than a pizza, at least, but...
Yeah, this was like, Bitcoin was already worth, hundreds of dollars at the time. So It wasn't like super cheap, yeah.
So I remember August 2020, this idea of social tokens was just sort of bubbling up, and I was talking to my friend Brian, who we had on the podcast a little while ago, and well, And Brian just sort of made a bunch of introductions. He introduced me to Ruben, he introduced me to Fielder people, but you were one of the people that he introduced me to. And that was because back in the summer of 2020, you had a social token and you were experimenting with a social token. And I think you were even some of the first specific events using Kickback and this convoluted mechanism for utility / access, etc. I would love to start a conversation there because I think what I hope to do through this conversation is sort of take listeners through those early days, through some of the machinations that kind of have maybe led to where we are now, and see if there's some lessons baked in there.
Yeah, absolutely. Where should we start?
What was Joon? Like, what the heck were you doing with those experiments back in the day?
I got interested in this idea of social tokens really because of the parallels between that construct and local currencies or community currencies, which are things that people have experimented with, issued, and used for decades and centuries. And most recently, for example, in London, you have the Brixton Pound, which was kind of successful. The community of Brixton, they have their own local currency. And the whole idea is you want to circulate within this local community. You want to make transactions using your local currency. So I saw parallels between that and social tokens, and I thought, oh, this is really interesting because now we're talking about, sort of internet communities issuing their own local currencies. And how does this go when it's not rooted in proximity, right? Which is what all of these local currency things were. It's all about, it's a town, it's a village, it's people who work in a certain factory. So that's the thing that got me interested. Saw this bubbling up. I had known Bradley Miles and Sid actually from Roll for a while. And I said, it seems like lots of cool people are issuing tokens on Roll. Can I do that? And so they did it for me. The thing was minted. And all of a sudden I had this Joon token that was live, And this was even, I want to say, slightly before Uniswap got really big. And so, there was never really a sense of like, oh, once you have a token, you can actually trade it. It was just like, oh, it's this weird thing I have in my wallet and I can just send it to people. So that was the presumption at the start, it was kind of like, oh, I have a thing in my wallet and I will need to find a way to like send this to people.
Yeah, I think it's actually a great call out. And, I got into the space in 2017 and people launching tokens and crypto, like the whole idea was to get listed on one of the major centralized exchanges and the huge dollar values going into all this sort of stuff. And this long tail and so proliferation of so many projects has really been unlocked in a major way because of Uniswap. And so there's a very large inflection point in how people were thinking about it. But I think, so it's kind of interesting, so you have this token. What was the initial attempts? I know you're using it for events. Was there other game plans before then? Or take us through some of the thinking around how you actually tried to put it to work.
Yeah, so I think the template early on was the idea of trading the token for your time, right? So I think there were a few projects going around. Alex was definitely the most prominent one. I may be misremembering, but I think he had something like that where you could get, you could buy his token and then you get some of his time to do stuff. So that was the original thing. And back then it was all like personal tokens was the term we all used, right? So when I had mine, my thought was, can I do something that's not a direct barter of my time? Can I use it for something else? What that might be was sort of anyone's guess, but I'm in events. I started the Consensus conference when I was at CoinDesk, so have always been involved in events. I go to a lot of meetups, and it seemed to me that you could maybe use, let's go back, what are events? Events are manifestations of communities, right? So it seemed to me that if you could use a social token anywhere, it would be in the context of an event. And, maybe you could use that to buy tickets to the event. And so that was the original thought. The way to implement it was to use some kind of crypto native event ticketing thing, which I happen to know Makoto, who is one of the core developers at ENS, but also has a side thing called Kickback. And that's how it all kind of came together. It was just like, looking for what can I do that's not trading my time for the token, because then I could just ask them to PayPal me. Then it was like, what do communities do while they meet up? And then finally it was like, well, how do you implement it? Oh, it just so happens there's this thing called Kickback that I happen to know about.
Yeah, I remember, I think you sent me some tokens and maybe I bought some more tokens. And then it was definitely not a straightforward thing to do. You had to really, really want to be there. And then you also had to hold a high bar to not just let people in because the friction was too high, even though you wanted to get them in there. And so it was a fun dance. But I think actually in that example, there's a ton of lessons that were sort of, you could almost trace back to those experimentations that I think are very much driving a lot of like the projects today, right? Like the first one you sort of noted was this idea of personal tokens being this exchange for time, which I think we share the same sort of intuition there that just made like next to zero sense, really, especially if, anybody who had been a freelancer in any way, you knew really what you're trying to do was get away from charging projects based on your time. And instead we're trying to charge based on value created, and tokens kind of didn't make sense there. But yeah, we saw the Pew token, which is sort of maybe not time, was access to retweets and Twitter. And then Ruben did one with the council token with experimentation with sort of his time specifically there. But then I think, where you started going, which was like, yeah, so access events as sort of this manifestation of community, I think is early insight to really where we're at today. And if you think about like the solutions to the friction that really existed before are one part, the guilds and the collab lands of the world to make it really easy to gain access to things. And then two, it's like NFTs in a large part, right? Like this idea of having a much simpler, easier to purchase, maybe some sort of visual branding associated with it. I can imagine if you were starting this all over again today, it would be like 500 NFTs that had maybe some cherry blossoms on it of some sort. And then, all of a sudden people would buy that and you get access, and the whole thing would have been so much easier. The thing that really sticks out to me here is like, in August 2020, we were all doing really silly, small experiments that didn't really matter, but were fun and interesting to maybe 15 to 20 other people. I mean, probably more, but those were the only ones that we actually knew and could actually put it in front of. And this idea of sort of like fast, easy experimentation. And, I think you're a great example of it. Like you didn't have, if you were launching an NFT collection today, there would be a lot of expectation on you maintaining and continuing to do this. And I think you sort of really leaned into this freedom of like, I'm not putting a whole lot of expectation on it, but I want to really start to pull in the threads here. Is that a good way of sort of capturing that? Like, I mean, would you even consider doing something like this again today?
I think I would, if I could figure out sort of, if I had a better framework, I think, for what social tokens are for. Well, I think I do have a framework, but I think it's a much more complicated thing than I initially thought. I did try to advance the project. I talked to Makoto and I talked to, for example, the organizers of ETH London about them issuing a social token, right? So the argument went, social tokens could be a wonderful way for existing communities to essentially issue loyalty points, although I didn't really think of it at the time. So it's just like, ETH London, for example, which is one of the longest running, I think, Ethereum meetups in the world. And I went to many in 2013, 14 with Vitalik and Gavin Wood. So it's a historic kind of thing, very strong community. And it's just like, the issue with running these meetups is you're always scrambling for the funds. You're always scrambling for the ticketing, you have to sell the tickets. And, how can you make some of these commons type of events a bit more sustainable? So that was the original angle I went on in trying to develop and advance the project. And I still think there's something there, but the exact tooling and the steps to get there, I think, are sort of need to be worked out a little bit. I guess the short answer to that is I totally would, and I think there's a lot of value in adding this tokens component to sort of existing communities in particular, rather than, I think, if you look at NFT projects, for example, you're talking about spinning up, you're generating a new community, right? So I'm very interested in sort of the opposite, which I think has its pros and cons.
Yeah, I think that window of like NFTs being like the spinning up of new communities won't be the most prominent moving forward. I think what you're talking about is far more likely, like these ideas of these tokens giving community superpowers. And the hard thing is actually creating some sort of meaningful amalgamation of human beings that are on a shared mission. And that the token thing is rarely the right first place to start there, though it is definitely the highest velocity and probably has like the most exciting or at least flashy use cases, thinking about Bored Apes, etc. Do you think there'd be another Bored Ape in the same way? Probably not, kind of comes out of an era. I want to go back to something you're sharing early on. You said that the local currency was sort of the thing that got you into social tokens. I think there's some early experiments in a version of this. I think Richard Kim's RNG was sort of an example of a token that was really trying to be, a community token designed to be a currency, or at least maybe I'll contrast that against maybe a lot of later DAOs or social tokens or NFT projects where really you're sort of purchasing membership in something or access to something, or owning one of 10,000 of this thing, and the value goes up as demand goes up, versus in a more local currency or something like what random number generator is trying to do, really trying to find, they're building some sort of internal economy, essentially, that this token was sort of being used as a medium of exchange on. we haven't seen any versions of that sort of have persisted. And I'm curious, thoughts on why is that still something that's interesting? Because I know you've done a lot of research on sort of local currencies, and I'm curious where the edges of that are.
Yeah, and I'll caveat this by saying I've done some reading and research, but I'm by no means monetary historian or anthropologist. There's great people out there, people like Brett Scott and my colleague Annalise Milano who do a lot of work on that. David Graeber, of course, as well. I encourage people to read some of his stuff. I think with local currency, the project was always, how do you keep the money from leaking out of the local economy, right? So it's all about you want to do everything with people you're in proximity with. So instead of going to the baker in the next town, you want to be going to the baker in the local, village. So it's all about containment of those monetary flows. And I think that has its challenges, right? Just there's problems with that whole model. But where that's fundamentally at odds with crypto is that crypto is super liquid, right? And everything can be traded for everything else. So I think that's kind of the challenge, plugging those leakages and getting value to accrue to that token as a proxy for that community is very difficult. And I think you even see it doesn't have to be a social token project, you see it in things like Uni token, right? Like that's the big question now. How does value accrue to Uni? The solve for this has historically been your native token buys a commodity, which is block space, and that's how value accrues, right? That's how value accrues to the ETH token. I'm not sure there's a clear other model right now, although I'm hopeful we figure that out somehow.
Back to the original use case that you ended up landing on, right? Is sort of this desire to be a part of something, and maybe that something is, we like to call it like a big adventure. What is this adventure that you're going on as a community? But the ability to be a part of a Discord actually solved that problem of ensuring that there isn't leakage around that digital asset better than probably anything else. And it feels like such a small thing in many ways, just to be able to gate access to something. And yet it's essentially staking, if you will, right? People are holding onto those tokens to be able to get access to a thing. And therefore those tokens aren't on the market, and therefore they're not being swapped into other assets, and therefore there's some value accrual that sort of achieves as these communities grow. And obviously, like, there's limitations to that, and probably better structuring to be done, et cetera. But I think it's kind of an interesting, definitely something that we saw early on was this idea of the economic model, or trying to have a lot of velocity in a token as being sort of something that wasn't going to sustain. And I think you're right. The question generally that most projects, or maybe the space is tackling right now, is like, are governance tokens a thing? Like, is there going to be value accrual to governance tokens? Is the hyperstructures narrative true, or is that some wishful thinking? And then even more broadly, I think the question around social tokens or DAO tokens or community tokens, should those be fungible tokens, or are NFTs actually more effective? And I think, we have some fairly strong opinions on that, and sort of backed up by so many of the projects that have come through recently. But the thing that just sort of sticks with me here is just how sort of nexus of experimentation that was happening in those early groups that we were in, and how fast that grew to being this sort of like web of thousands, hundreds of thousands of people that were pushing at these edges. And, at a certain point, there's like a sort of a reconstitution of those insights into whatever will sort of be the next wave. And I think we're kind of almost at that time right now where there's like enough has been figured out for people to go, okay, I kind of get that. But there's still so many open questions that we need to get back into that more innovative experimentation phase. And I think people are launching things with so much seriousness right now that it almost removes a lot of the potential for the sort of lightweight, fast experimentation that actually drove this last wave. You have thoughts on that?
Absolutely. The stakes are much higher, right? So it's totally sort of understandable. And it's sort of gone from the realm of sort of amateur dabblers to now there's like professionals, right? There's people who've done sold companies, launched projects, etc. Have PhDs or MBAs, or perhaps tens of millions of followers. But I think there's two things that make me optimistic about this idea. So one is I did a lot of reading around loyalty points, right? I was very interested in loyalty points. They're kind of a small thing, but at the same time, they're very persistent. Many companies and all sorts of entities find a use for them. And they are a thing that sort of provides a bond between, say, a grocery store shopper and that particular grocery store. Thinking here of Tesco, the British supermarket. So there's a great book out there recommended to me by Matt Alston, who does Bonfire. He was involved in building Uber's loyalty program. So he recommended me this book, kind of an oral history of Tesco's loyalty points program, which is called Club Card. Very successful. There's numbers associated of like, how much such and such they generated as a result of this program, big numbers. But what's really interesting to me is like, I also collect loyalty points, right? I'm not a Tesco shopper, but I collect Avios, which is like the British Airways related thing. You can get tickets and so on. And Starbucks, of course, right, also has loyalty points. It just seems to me like a bunch of people have figured out like this whole loyalty points thing. And it's like, it's working. Like millions of people are using it. They're interested in it. They're collecting it. They're spending it. So it seems to me like, it's a valuable thing. Both the issuer and the user love it. It's very sticky. Like it's one of the reasons for introducing it is because it creates very high engagement and loyalty. And so it seems like we're just half a step away from that model and some kind of fungible social token. Of course, the issue with crypto is you have lots of reg issues, and then you have, again, that leakage issue, right? Because loyalty points are like local currencies. You can't spend them anywhere else, or at least anywhere that's not permissioned, right? So if you look at, for example, Avios, which is actually administered by a third-party company, British Airways is just one of the founding merchants of it, but you can use your Avios in lots of different places, right? Now, that's great, but that company Avios needs to make money. It needs to decide who are the next merchants that come into this that you can spend Avios at and so on. So, it just feels like there's an analog there to social tokens. And I wish I could figure out what it was, but we're close. The overlap is massive, it seems like.
I love that example. I'm not bullish on loyalty points whatsoever for, I think, the reason that you're hinting at there. But I also think you're correct. I think that there is intuition there that is probably pointing to really where I think utility will lie. This is a great conversation I had with Matt as well, who has just a depth of knowledge on loyalty points. He's talking about Uber's loyalty program, and he's talking about airlines' loyalty programs and just how different they are, because airlines have unsold seats, unsold expensive seats, and they have sort of this like zero marginal cost of actually giving something with high perceived value to their most loyal customers. So they're not having to spend any more to send that flight in any way. And yet there's Joon, who's been a dutiful collector of Avios points, all of a sudden getting an upgrade, and he feels like, wow, it's well worth the $65 a year I spent on this credit card and giving away all my personal data. Uber, on the other hand, each ride was still something that Uber had to pay for. And so there was a marginal cost to each additional loyalty point that came out. So they had to go and build out a network of perks, et cetera, that just didn't have the same sort of like oomph behind it. So merchants that have the ability to offer something that has high perceived value but very low cost is essential to these programs. And in addition to the challenge that you, I think, rightfully articulate, which is that the ability to move in between these assets. Like it's yes, you can go sell your loyalty points, I think, on some contracts, but it's cumbersome and expensive, and definitely not trading on an open market. That format of fungible tokens as loyalty points, I think, is going to just be very challenging. But if we look over into the world of DAOs, or let's say collectives, you get into a lot of the similar things. So like one of the big things I think about at Seed Club quite a bit is we are trying to do two things, right? We want to get the best projects to come work with Seed Club, and we want to bring the best people who can support those projects coming into Seed Club. And then our job as sort of those governing the Seed Club network is to figure out how do we continue to offer more and more and more value to those constituencies such that you just want to be here all the time and tell all your friends about it. And I think some of the things that we're building right now are in that line, which is like, where can we make investments of capital or time that will solve problems that will save projects or save collaborators from having to go and do that themselves. But you could also imagine that chunking out to Notion credits or to airline mile, discount healthcare. Like there's a whole host of things. And so I think what's going to happen is that loyalty will be represented more like a Costco card. It's going to be like, I'm going to buy in that NFT, or that set of tokens is going to represent my membership in this. And if I get accepted, some will be permissioned, some will not. Then not only do I get the value of that core network, but all the perks that kind of come along with it. And I think it gets to something at the similar way, which is that really, people are buying and holding an asset that represents access and to all these benefits. I mean, where it doesn't get is that it's more difficult to represent like you as a more frequent traveler, and therefore probably a higher value customer, and therefore the ability to actually reward you versus me who travels less. Like there's like a challenge in the amount of sort of granularity you can get into there, but I think there's going to be solves for that, and it probably involves non-transferable tokens or XP or something that's happening within these communities that's maybe reputation based, maybe not. So yeah, thoughts on that?
Yeah, I mean, the two-tier token thing is something that, airlines, for example, have come up with, right? So like early airline programs were just one token or 1 point, and now there's two, and one of them is non-transferable to your lifetime points, right? So usually called like tier points or something similar, where it's based on your actual miles flown, actual sectors flown, versus the other one, which oftentimes you can buy with cash. Like you can buy those fungible tokens, Avios, with cash, and then you can redeem them for certain things. So agree that the two token model probably is where we will end up. Just on the note of like buying stuff, one thing that was interesting to me early on was like Tom Osman. He had a thing called Shiny Object Social Club. And Tom is into like no-code stuff, which is another one of my passions. If you love talking about Airtable automations, please ping me at JoonIan on Twitter. But no-code stuff I just find super interesting. You can do all of this great stuff with no code. But he had this community. He created this Discord. He had a token at the time. I'm not sure if he had a token, but anyway. And then I think one of the proposals was like, hey, some of these no-code things have enterprise tiers where you get more stuff. What if we as a Discord were an enterprise and we could just go to these people, get a better price, get more stuff, and people who join the Discord are part of the enterprise, right? Which I thought was like, oh, it's like group buying, but with some kind of token component and some kind of community component. That's kind of cool, because then we could buy like the enterprise tier of Airtable, we could buy the enterprise Notion, and presumably someone had to do the math, but presumably we're all better off, right? So I thought things like that seemed interesting. It makes me think back to, for example, some of the things in fan studies, like BTS fans, right? They use their collective coordination and buying power to do stuff in the real world. So they coordinate online. They en masse buy albums at certain times so that BTS is like #1 on that chart, right? They en masse coordinate and call up radio stations and request the song. So it's a charting, it's a #1 single. So that kind of stuff is interesting. I feel like there's something there about basically coordinating your capital and deploying it in some very targeted way. But there's a community component to it where it matters what you're spending that money on.
It's interesting in this conversation. It's probably the first conversation that I've had on this podcast where social tokens has taken such a prominent space. I feel like if I zoom out to 2 years ago, there's sort of the social tokens was sort of, well, as you said before, it's personal tokens and then social tokens. And then we started talking about community tokens and then it was NFTs and now it's DAOs. And it seems as if there's sort of this ever evolving and seemingly getting more general than specific, oddly enough, which you think it would go the other way, but sort of language or memes that are representing all this. I'm curious what your take is on DAO as sort of the meme that captures this, or at least do you sort of see that as the natural expansion or outgrowth of social tokens, or do you think there's sort of like a separation between it that's worth distinguishing?
It just seems to me like it's a pretty natural overlap. Some of the language is quite different, and perhaps a bit of the history is a bit different, which affects how we frame things, but both are like communities that are coordinating to deploy some capital, like the original DAO was like literally that, right? People pooling their money to then deploy it in a venture capital type way. I see the overlap is very strong. Perhaps the only difference is that the DAO nomenclature comes with some expectation that there's some software or application attached to it, right? So like there's something that is operating, and now you need to have this thing called a DAO to somehow govern that thing. Whereas with the social token thing, it's like, well, the community is the thing, And then you kind of go backwards, and it's like, oh, now we're going to build things as a community, like FWB, right? Now we're going to build software things as a community. So yeah, it seems like both arrive at the same place, but from different directions.
Yeah, I like the idea of like communities or social tokens don't necessarily need to have DAOs, but DAOs need to have communities and probably a token. So you can go one way, but not the other. And I think it's an important distinction. And again, to maybe a bit of a theme here, like this ability for rapid experimentation or at least exploration, I think is a thing that we would do well to really encourage more of right now. And if everything needs to be a DAO and everything needs to be, full stack and, be a thing with thousands of people in it, we're going to miss out on a bunch of novel experiments that are fine tuning or playing with some of the edges of the numerous challenges that exist in this space right now. One of the things I've been thinking a lot about recently, and remember we've had a number of conversations, but sort of, again, bubbling up in C Club, is this idea of media. You hear it in media DAOs, some of the early social token use cases were around newsletters and creators and sort of this broader space. And of course, a number of publications, including CoinDesk and Decrypt, are also sort of exploring how tokens integrate within their media game plan. And something, again, we're thinking about at C Club of like, how do we continue to create, build our brand, create a platform for our communities to sort of reach new audiences. Yeah, we'd love to turn the conversation to like, what are some ways that tokens can really empower media orgs? Obviously, you spent a bunch of time in that space. You're not in there right now, but I know you still do a bunch of writing. I know you do a bunch of thinking on this. Maybe we can take it in two places. Like one, where do you see tokens integrating in with media, or where are some of the exciting places? And then we'd love to talk about some of the specific projects that are experimenting.
Yeah, absolutely. I write a column now for CoinDesk on media and crypto. So in theory, I should know a lot about this subject, but we'll discover if I do in truth. I think just to zoom out a little bit, and this might get a little bit abstract and theoretical, but I always refer to this great seminal paper written in 2000 by a critical theorist named Tiziana Terranova. And the paper is called Free Labor. And, this is 2000. This is early commercial internet days. In that paper, she talks a lot about Marxist labor theory, right? So the whole thing about Marxism is, there's forms of labor exploited by capital and so on. And she really elucidates, and I think it's very relevant even today, how the internet changed labor relations, right? For example, she writes about, there was AOL chat rooms, and there were all these moderators of these chat rooms, and they were all volunteers for a corporation that was then had an IPO and was worth tremendous amounts of money. I think to my personal experience, in early internet communities on IRC, for example, and, you would hang out in channels, and one of the highest honors you could get is to become a moderator of that channel, right? Then you have the power to like ban people and kick people and otherwise do a job of just like moderating that conversation. And all of this was unpaid and volunteer. And so she really describes a shift in labor relations caused by this thing called the internet. I think with social tokens and crypto, you're kind of working through that, right? Because the whole claim is that instead of unpaid labor, now you're paid. You're paid in a thing called a token, which is worth what, right? I always go back to that. And the reason why I bring this up in the media context is because much of that early internet labor was in fact media. It was, moderating chat rooms. It was sometimes moderating a mailing list or producing a mailing list. It was all of these things that are basically forms of media. And that morphed in the Web2 era into things like BuzzFeed, for example, or Huffington Post, right? Which was like users contribute their media, that media gets aggregated and monetized, users get nothing or something, but quite little. And so now we're in the next phase of just like, we went from volunteer and exploited monetarily. What's the third thing? And I'll stop there, I guess, because that was the first part of the question, I think.
I think there's so much insight to pull from some of those early like Web 1 to Web 2 media experiments, because it did an incredible job at leveraging intrinsic motivation to get a massive amount of labor or value out of it, right? And all of Web 2 has really been based on this idea of being able to create those feedback loops. We had Jared on a couple months back who's talking about the early days of Huffington Post and sort of the comment section and being a moderator and just getting that star next to your name and being able to like moderate or reply to those comments was just this huge thing. And of course that extends to TikTok and to Instagram now of people like, yes, there's more of a monetary opportunity there, but not for most people. And there's a pursuit of that seems to be it. And still the dopamine release of getting those likes, I think, is driving it. As a DAO or a community, really, what that is incredibly powerful. Can you bring your BTS fans together to go move the needle forward in a way that actually creates value for everybody? The question seems to be, like you've sort of alluded to, is like you get this token that is supposed to be valuable, but is it valuable and how is it valuable? And what are sort of like the next level models that unlock that here. And I'm interested in seeing more and more experiments in this direction, because I think there's sort of like the last part of that feedback loop that, really could create a lot of value in sort of this Web3 media space. And I think that the ones that I'm looking at right now are maybe in part some established publications that are playing with it. I was at Consensus in Austin early this year, and there was a desk token everywhere that was sort of being used there. And I think there's a couple other publications that are exploring that as well. But then I think actually where the most amount of innovation or experimentation is happening here is creators using their own NFTs. And so that's like, whether that's music NFTs through sound and sort of unlocking fandom in that direction, some of the experiments that the DMX team have done. And then I think even more into like newsletters or learning communities, etc. Do you sort of have any thoughts on like where experimentation is being done right now in the intersection of tokens and media?
Yeah, I mean, there's two that I've been following a little bit. There's Kyle Chayka and Daisy Alioto's Dirt newsletter and community. So they started out issuing NFTs. That was kind of a capital raising exercise. And then now they kind of have a Dirt token that's like an access token. And I think they're in the process of giving token holders various ways to impact the editorial product. So there's kind of that. On the other hand, it's kind of the more pure capital raising type, which is like there's something called JournalDAO. JournalDAO, and this may have changed in the last few weeks, but originally their thing was like, instead of we're going to buy the Constitution, right? It was like, we're going to buy a small local newspaper. Partly because, local news in the US is decimated. And many of these papers are getting rolled up by private equity funds who's then, basically strip them and sell them on or load them up with debt. So, local news is in crisis. You have a lot of distressed assets. If you can raise and coordinate capital and you care to have and own a local newspaper, it's not a bad time to try and deploy that capital. And the idea then was to be much more of a cooperative, right? So it's like raise capital, coordinate, be a community-owned thing that is owned by the people who actually benefit from the news gathering from that newspaper. So I think, those are like two interesting ones I've been tracking. And it feels like there's like two buckets of things. Like one is capital raising, whether through NFTs or just like, like the Constitution DAO type style, crowdfunding type style. And then two is, back to that kind of access and voting and governance type thing.
The underlying why for me in these sort of crypto networks and in communities is this idea of ownership or governance, right? Like less so like just what decisions to make, but also that those decisions ultimately benefit those that are holding these tokens, right? And so if you imagine early Huffington Post, like you have hundreds, thousands of people that are putting their heartbeats into creating content and comments and sharing and all these sort of super valuable things that ultimately, all that value went to Ariana and others who are sort of the equity holders of these organizations. And so there's sort of this like, it feels very much like digital feudalism in many ways, right? You go till the soil, maybe you'll get some benefits, maybe a bit of money, but right now it's just, you'll be knighted if you do a good job at moderating contents. And, oh, by the way, this land is still ours and thank you for your work. And in Web3, in my mind, it's like, okay, well, we, the people, are the network. And if we are not here, then there is no value. And therefore we should have a stake in this network. And that if we're able to do that, not only is that sort of just better for people, but ultimately there's more value that can be created because we're sort of incentivized in the right direction. And obviously there's a million question marks around how do we go do that well. To me, that's like the thing where I feel like is still missing from a lot of this media exploration right now is that I'm not seeing, to be fair, I'm not deep into all of these projects, though definitely we're big supporters of Dirt and love what the team's doing over there. But this idea of like, how do we come together as owners and creators here together? I feel like there's like a huge opportunity for artists or even influencer houses to be DAOs in the future, or where sort of this collective effort of people over time is actually accrued to the network that individuals have a stake in. As
we were talking, I'm thinking more about the sort of the product market fit maybe of publishers and readers, right? And I think there's a natural sort of complementary nature to that. And we can also apply this to events, large events, conferences, for example, like CES is owned by a nonprofit, right? And that members of that nonprofit are large technology companies. They have an interest in getting CES to work. They're sharing in ownership of that. And CES is the thing in which they can various ways exercise some level of influence, right? Whether it's their CEO gets to speak, or there's a track about 6G or something. You see that model again and again in large industry-focused conferences. So you see this also in Mobile World Congress, which is the main telco conference. They get 100,000 people a year. Again, it's owned by the GSMA, which is, again, a nonprofit of all the very same people who attend Mobile World Congress, right? All the telco companies are the members of GSMA. GSMA makes this conference. Those members attend the conference and exert influence and govern it and so on. Through that common project, you're creating a product. The product is the conference. And then you're consuming that product as well. So now if you take that model and apply it to a newspaper, right? Who are the people who consume, who need Bloomberg, who need the Wall Street Journal, who need a local newspaper? Those constituencies are all quite different, right? A local newspaper is the townspeople who live there. Bloomberg, it might be the world's largest, hedge funds and banks, right? So I think that model might have some promise in the sense that it's adaptable and it can produce quite different results depending on what community you're talking about. They need to invest and own a thing that they then all need to consume, seems to be the pattern. Which we might then ask, let's apply this very same model to crypto news, right? What's the crypto news that everyone reads? Well, arguably it's CoinDesk. Now, CoinDesk today is owned by DCG. What if CoinDesk was owned, instead of DCG, I don't know, the 50 largest protocols in crypto, they all own CoinDesk. There's some entity, a DAO, that's, is charged with producing and operating the actual product of CoinDesk.com. And they all can exert their influence in various ways. But no one protocol owns it. No one VC fund owns it. It's co-owned by the community. It produces a thing that the community finds extremely useful and critical and therefore consumes and pays it money to do so.
I think that's interesting because it seems to me like the biggest risk, though maybe this isn't a big risk, is getting 50 of the top projects to do anything together. It probably seems like you imagine Bitcoin Maxis partnering with, I don't know what number 49 is, but arguably probably other areas of the stack, this becomes maybe a strategic risk for some of these sort of centrally owned organizations, because like the best way to unseat I'll just go after the bankless guys here, even though we love them. The best way to unseat the bankless guys would be to get the top 10 or 15 DeFi protocols to come out and fund and support and grow DeFi 2.0, or maybe even try to redefine that term. I think it's fascinating. I think we'll see a lot more of, especially as these emerging spaces have a gap, maybe in like if there isn't a publication that is serving one extremely well, and maybe DAOs want to have that exist because we need to grow the ecosystem. Running that is probably, it's a media business, is a difficult thing to build. That talent doesn't exist in every single organization. Arguably being sort of the focused entity on trying to go build this thing is probably your highest likelihood of making that a success. If we think about it, there's probably some versions of that out there right now, but I would be surprised if we go another year or two without seeing some fairly meaningful collaborations from large organizations on the media front. Largely, that media is, there's no shortage of unhelpful coverage in the mainstream media, so you can't really trust that. And then in the general crypto media, it's very difficult to cover more niche topics. And so you end up with this sort of big gap in useful, valuable information that ultimately gets filled by price go up and people big sale and latest scam and Shiba, Elon's affair. Like all these sort of things kind of get bundled together, and it makes total sense that somebody coming from the outside would look at crypto and be like, this is a bunch of scammy, weird bros that are just standing in line to be hang out with other weird bros at ape conferences. And that's just not helpful for the world that at least I want to see exist.
There's two issues. Like one is like what gets covered and what is editorial policy. That issue will exist whether it's owned by a DAO or by, Rupert Murdoch. So you'll have to grapple with that, sort of editorially. And then I think the other issue is exit to community, right? So I would love to see some existing crypto media exit to community. So for example, what does it look like if the Defiant was to exit to the top 50 in DeFi protocols, and they're the new owners? Or, Bankless perhaps to the top, X Ethereum projects. And then, CoinDesk to the top 50, market cap projects. So I think spinning up a new media thing, people do it all the time. I would love to see the opposite, where an existing media thing has reached the limits of the existing media model and actually exits the community and hands the reins of that publication over to the community.
I love that, because there's just so much value in the trust and reach that these teams have already built there as well. And also we do see challenges. I mean, BuzzFeed and even these sort of Web2 projects or companies have a challenge in actually scaling beyond certain limits, right? Even despite raising a lot of venture capital. And so, there's probably, no shortage of challenges in the media business. And that would be a bold step. Who would be the best candidate for that in your mind?
I think someone that's quite focused and whose community really relies on them, right? So it might be a Bankless, it might be a Defiant. I don't know if there are equivalents in other chains. Maybe it's like Evan Van Ness this week in Ethereum, for example. It has to be something that's really critical and that the community really needs and consumes as a matter of course, right? The thing of record, right? And it's not such a crazy idea because, you think of publicly funded media, the BBC and so on. That's kind of what it is, except instead of a DAO, it's a state. The state has a number of mechanisms to maintain the independence and so on and so forth. That's a basic idea. The people who need it the most own it, fund it, and consume it. I think it has to be someone critically important to that community.
Yeah, I guess even the Bankless DAO, they didn't quite end up going that way, but that would have been a big opportunity for them. But there was still a big separation between media and the DAO for a number of reasons, I think. Definitely something to watch. And you've got me thinking about a bunch of things as we continue to explore our media game plan, strategy. How do we participate in defining that space?
And I think, tactically, like the thing that always comes up is like, they're going to be influenced by the owners and so on, right? So one way that traditional newspapers have solved that is through a trust, right? So The Guardian in the UK, for example, is funded in perpetuity by the Scott Trust. That is explicit in the trust, all these rules and so on. And it's almost like a smart contract, right? The trust disburses X amount of dollars every year forever. Now, they are trustees of that trust. They need to make sure that number doesn't go to zero. They can do things around that. But as far as the newspaper is concerned, they have that money in perpetuity. X dollars is coming every year. That's set in stone, right? So with smart contracts, you can do a ton of those things. For example, you can imagine the top 15 DeFi protocols. They pump money into the smart contract. That's a trust contract. That trust contract will emit the funds for the next 10 years, right? And then maybe there's some other governance process that happens at the end of that. Or you can just extend that. It's 100 years, right? The protocols are funding this thing for 100 years. And this is media that will go on for a century. Why not do that? That's what blockchains are for, right? Making things permanent on the internet.
I think that's fascinating. How to unlock some of the exceptional values locked away in DAO treasuries like Uniswap and, go down the list, making contributions to build institutions that are designed to support a space for decades upon decades. I think that's absolutely fascinating. I love where this conversation ended up, Joon. I think I've always found our conversations to be fruitful and pulling me in new and interesting ways. I think you see the world in a very interesting way and are very thoughtful about your exploration of it, even back to the earliest days, which again, seeing this document and seeing your comments on that first doc made me fond memories of different times. Coming up here on the hour, I want to see if there's anything you want to put on the radar of our listeners. Maybe come back when you actually have a website for your company so we can shill that a little bit more, maybe where people can find you on the internet.
Yeah, absolutely. I don't think Amplified will ever really have a website.
But
what a
flex.
If you know, you know. And if you've put on an event with thousands of people and hundreds of speakers and felt the pain, then you can come look for us so you don't have to do that again. You can find me on Twitter at JoonIan. I am frequently in the Association of Cryptocurrency Journalists and Researchers Telegram group, which is a nonprofit I founded for journalists covering the space. So probably every journalist in the world who covers crypto is in that group. It's a fun place to debate, rumor monger, get gossip. And yeah, I think that's about it.
Love it. 100%. If you're launching a conference, a big event, you want to have no stress involved in it, shoot Joon a message or hit me up. I'll make sure you get connected. I'm sure there's a Notion page somewhere that has some details on what he's doing. He's just being coy about it right now. And yeah, I remember, I haven't actually been in that Telegram chat forever, but I remember some of the some interesting, thought-provoking conversations in there. So definitely want to check out if you're in and around that space. Joon, appreciate you spending the time with us today. And of course, for all your support over the years. So coming up on 2 years next month, my friend, the years of C Club. And I look forward to many more.
Thanks so much for having me. And, so pleased with how C Club has evolved under your leadership, and looking forward to just engaging with this project and the community a lot more.
Giddy up.